Hey folks, this is Josh Taylor, and I want to welcome you to what is going to be the first of somewhere between 20 and 30 videos that are going to be an entire series called Forex Trading for Beginners. Now, we put together this video for a bunch of our clients that who are kind of new at Forex trading, and we wanted to make sure they have some solid information to build their Forex trading future on. And so these videos, we're going to try to make them short, so that you can add a video here and a video there to add a little bit more information and knowledge to your Forex trading arsenal. Okay? Now, if you've never heard of Trade Advisor Pro or you've not worked with us in the past, what I would highly suggest doing is that you sign up for one of our free Forex training webinars. Now, these webinars are going to be a lot more in depth than the videos. The videos are meant to be primer information videos to basically give you some basic guidelines on how the Forex market works. But if you want to see in depth from A to Z how to trade Forex, I'm going to highly suggest that you sign up right now for one of our free Forex webinars. You can actually pause this video and go sign up. I would highly suggest doing that. And you can sign up at tradeadvisorpro.com/Forex. Okay, now I'm going to keep this video on here for a few more seconds. And while you can do that, of course, push the pause button right now. If you're just getting started, I would highly suggest watching the webinar first. But go ahead right now and sign up for the webinar, and I'll give you a few seconds to do that. So the first question is what is Forex? So Forex stands for foreign currency exchange. And the foreign currency exchange market is actually the largest financial market in the world. It is traded at $4 trillion a day. Now, this is anywhere from transactions, whether maybe you are a Japanese company that is looking to buy U.S. parts, or actually that's more likely the other way around, isn't it? Let's say you're a U.S. company and you're buying, like you're Ford, and you're going to be buying, $50 billion worth of parts from a company in Japan. Well, for you to buy those parts from Japan, they're not going to take U.S. dollars, right? They're going to take Japanese yen, and so there has to be an exchange of those U.S. dollars into the foreign instrument, which is in this case the Japanese yen. So you would exchange those U.S. dollars, usually at the banks, into Japanese yen and make your payment on that. So that is one piece of the Forex market. But what we're going to talk about in the Forex market is the spot Forex market. Now, the spot Forex market is basically what everybody's talking about. When you hear people talking about Forex trading, they're talking about the spot Forex market. So in the previous example, we talked about that we're taking US dollars and exchanging them in for yen. You actually, the company would actually own US dollars in their hands or in the bank, and they're exchanging them in for Japanese yen in their bank. Okay, they're what you call taking possession of those funds. The spot Forex market, you don't actually take possession of those currency instruments. You're not actually buying or selling an exchange in your hand. It is all done electronically, so it's called the spot Forex market. You're basically holding electronic positions in these currency pairs. And when we take these positions, we're always trading these Forex currency pairs in pairs. Okay, so in our example we talked about before, exchanging the US dollar for yen. Now here's two different currency pairs: the euro yen and the euro US dollar. Okay, what this means is if we're buying the euro, if we're buying the euro yen, what that means is we're buying euros and selling yen. Okay? Now, if we were selling the euro yen pair, then we were actually selling euros and buying yen. Okay? So what we do is our goal as Forex traders is to take positions. It doesn't matter. Like in stocks, there are more advanced techniques when you're trading stocks, but most people out there use the buy and hold method. Buy a stock, it goes up, you sell it, and you make a profit. Now you can short a stock. There's a lot of speculated risk when you're shorting stocks, but in the foreign currency exchange trading using the foreign currency spot market, It doesn't matter if the price is going up or it's going down. As long as you are betting in the right position, in the right direction, you're a winner. So, in other words, if you put an order in to sell the euro US dollar, and the US, you put your order in and the US dollar drops, does that make sense? So if our goal was to sell the euro US dollar and we sold it and it dropped, then we are in profit. And when we close out that trade, we make a profit. And likewise, if we buy the euro US dollar, which means we're buying euros and selling US dollars at the same time, and the pair goes up, then we make a profit. Okay, so our goal isn't as much as we got to wait for an opportunity to buy, but what direction do we feel based on past performance and current economic factors that are going on in the market right now that will cause what direction do we feel that currency pair is going to go? And once we understand that, then we have to choose the proper entry point and exit point. Where we're going to get in, what's the most highly favored opportunity to get into the trade, and where do we exit out of the trade in order to make a profit. And of course, you want to make sure you use what's called a stop loss, which means if the trade goes against you, which sometimes they do, then you need to make sure you pull out of the trade without putting all of your capital in your Forex trading account at risk. Does that make sense? So here's an example of a chart on the USD yen. We talked about the example earlier of buying your exchanging US dollars for yen. Now this is the dollar yen currency pair, and what we can see here is that since around this time right here, the value of the dollar has strengthened against the yen. Okay, so in this opportunity, when you see the currency pair going up, and let's say if we expect the currency pair to go up, then what we want to do is wait for a pullback on this currency pair to get for an entry point. And likewise, when this currency pair dropped, if we would have saw any indicator of this thing dropping, we would have waited for price to go up to a point for an entry, for this price to drop. Now here's the thing I want to share with you, because there's so many different theories, and there's a million and one ways to trade Forex supposedly out there, and there are so many factors that are actually causing more confusion than not. So I want to explain one simple concept here, and this is the concept of simple support and resistance. Okay, now here's what I want to show you. This is what your charts should look like. Okay, it's clean. Look at this chart. This is clean. It's easy to read. It's understandable. It's very easy